Welcome back to Ostrich Investing. Today we are going to talk about a company in the crypto space. We're going to talk about HIVE Blockchain. So by way of introduction, HIVE is listed on the Canadian Venture Exchange, and it's actually one of the large digital currency miners, and its market cap has recently eclipsed $1 billion. This was requested by a viewer, Johan, and while it's definitely outside of my comfort zone, I thought it would be really interesting to explore. I haven't really looked at any individual plays in the crypto space, so I thought this would be a good opportunity to take a look. And obviously, these stocks are going to the moon, as the rocket emoji on the right suggests. So like and subscribe if you like the video, but please know we normally talk about boring value and dividend stocks on the channel, so don't get too excited. So highlights of HIVE. It's got exposure to rising Ethereum and Bitcoin prices. Those are the two primary coins that it mines. They've had really strong 2021 expected results. They're still waiting on Q4 and expect meaningful net profit. There's no dividend, but of course you knew that already. So disclosure, Ostrich does not own shares in HIVE. And disclaimer, this is not financial advice. Obviously, do your own due diligence. This is just for educational and entertainment purposes. Let's jump into it. So the business, HIVE has crypto mining facilities or data centers in 3 jurisdictions: Canada, Iceland, and Sweden. And you can see from the slide here, which is from their corporate investor presentation, what they're really trying to show is certain jurisdictions are more advantageous for crypto mining. You want a jurisdiction that has low cost electricity because of the power that it takes to run these data centers. You need low temperature zones to keep these data centers cool or avoid excessive cooling costs. And of course, you need a fast internet connection. And so what they're trying to say here is that they're in the zones in blue down at the bottom, which has all 3, and some of the other industry mining power, notably China, Georgia, and the US, don't have all of those elements. So again, and just I point out, they've also just recently acquired a 50 megawatt facility or a facility that has access to 50 megawatts of power in New Brunswick. So the company has been growing. And if we look at the share price chart, basically since inception, so in mid 2017, previously the company the predecessor to HIVE was a gold mining company, didn't have much success. So they tried their luck at cryptocurrency, rebranded, and there was a transaction in 2017 that took place whereby they acquired their first sort of data center crypto mining assets. And it's up 120% since 2017. So it's been a rocky ride, as you can see here. It had a really good start and then rolled along the bottom for a while here. But as I think most of us know, over the last sort of 6 months, the crypto space has been red hot, and HIVE has been a beneficiary. Also, just to point out, they raised $15 million convert via private placement in January 2021. And in February 2021, they made that $25 million acquisition, and that again for the 50 megawatt facility in New Brunswick. And they're funding that with all shares issued at $5 a share. So they're taking advantage of the high share price. Here, I thought I'd just look at, since they primarily mine Bitcoin and Ethereum, I thought we'd take a look at the prices of both of those coins over the last 5 years. Just to check in. So in the dark blue line, that's Bitcoin. In the light blue, it's Ethereum. And again, no surprise, significant rise in both coins over the last 12 months. And then over the last 5 years, Bitcoin is up 11,000% plus. And Ethereum's done even better, up 30,000% plus. So for those of you who's followed along, and I've talked about a few oil and gas stocks who've gone completely in the other direction, this is pretty cool and crazy to see. Clearly, if you'd bought these coins back in 2017, you've probably retired. And before we jump in, I think this is relevant to the story. We'll talk about the financials in a little bit. But there was, between the two sort of peaks here, there was that period kind of between mid-2018 to mid-2020 where crypto prices sort of, fell back into a trough, and there was some real weakness there. And you'll see that in HIVE's results when we jump into it. Okay, last price chart, I promise. But again, I think it's just so important to the story here. This one looks at HIVE compared to Ethereum price. And again, Ethereum is the coin that they mine the most. So they're predominantly Ethereum with a little bit of Bitcoin. And you can see that the stock price historically has been quite correlated to the Ethereum price. So Ethereum is in the light blue and HIVE in the dark blue. And you can see that pretty correlated historically. And then just recently, Ethereum's continued to rocket up. And just in the last few months here, HIVE hasn't really kept pace. So just something interesting to note. Okay, let's talk about the financials. So on the right side of the slide, I guess we'll point out the far right shows 33.3 million in revenue. That's actually just for a 9-month period. The year ends March 31st, so expect results coming out shortly for the full 2021 year, and no question it's going to be a record year. And if we just keep going here, there we go. Gross margin down on the bottom of the slide, I've presented net income here. And then gross margin in the blue line. Gross margin's been volatile. I mean, most businesses' gross margin sort of stays in a relatively tight range. Gross margin for HIVE has kind of bounced around between 20 and 55%. And I think, as an investor, we'll talk about it later in the key risks and key drivers. But for a crypto miner, there's a lot of drivers here. Power costs are one thing. Service providers, HIVE uses someone else to help manage the data centers. They don't do it themselves. So Blockbase is who they use. That costs them money. Rewards. So depending on the mining difficulty and the block rewards, that can change the economics. And of course, lastly, the market price of both the Ethereum and Bitcoin. What's that worth at the end of the day? And if it's appreciating, that's probably positive, clearly positive for a miner. But there's a certain price level of the coin where it might not be economic to mine. 2021 year to date, the net profit, if you can see here on the chart, it's the first year where they will post net profit, and about half of that $28.5 million. And again, that's just through the first 9 months. So when we get the full year, expect that number to be a lot larger. About half of that number was from operating profit, so mining of the digital currencies. The other half was just from having currencies on their balance sheet that revalued. So as those currencies appreciated, those coins are worth more. So interesting to see the breakdown in the profit there. And then just to point out for 2019, negative 138 million in net income. I say 138 million in net. That's a typo. 138 million in net income includes a $90 million impairment charge. So obviously that was a bad year, and it goes back to that pricing we talked about in the trough between mid 2018 through mid 2020, where tough pricing environments, and HIVE took an impairment charge there. About 50 million of that was related to data center equipment. So another thing to keep in mind here is that you need the most up-to-date equipment, computer equipment, to be able to mine efficiently, and that can change quite quickly. So you need to constantly be spending on the latest and greatest equipment. Okay, so I guess, just to summarize financials quickly, revenue historically had a quick, big jump from 2018 to 2019 as the business got going. Company has been reasonably acquisitive by expanding its operations in Sweden, Iceland, and then adding Canada in Quebec originally, and then now in New Brunswick. And 2021 is sort of, call it the breakout year, where they've turned profitable in a very favorable pricing environment. So let's talk about Genesis. So originally when HIVE sort of went public in 2017, Genesis was a key partner. They came in as a 30% owner, and they were operating the data centers on behalf of HIVE. Things didn't go as well as they would have hoped. There were some disputes and potential legal litigation on both sides. And in 2019, they announced a settlement agreement between the two. And Genesis still owns 16% of the shares, but that's down from the 30% that they held initially. And as part of that resolution, they both agreed to discontinue legal proceedings and a mutual release. HIVE assumed responsibility for Sweden and Iceland data centers. And again, Genesis still owns $55 million shares. And you can see on the right, Olivier Roussy Newton, hopefully I'm pronouncing that properly. What's interesting / strange here is he's still listed as the founder and strategic advisor on their website and listed sort of as their president. I think he's the relation to Genesis, and Genesis is entitled to board representation for 3 years from 2019, as long as they've got 10% plus ownership. So it'd be interesting to see what happens going forward. And I think there's still some dispute from HIVE relating to amounts owing to it under the cloud mining agreement. So anyway, long story short, it's a bit strange. They're 16% or their top shareholder. They've had a real dispute with, and this was their original operating partner. They're no longer the operating partner, but still own 16%. And the dispute with the major shareholder supplier, is an overhang on the stock, I would believe. Management is another, call it a red flag. I don't know enough to be fair, but it's been a game of musical chairs. And so if we just look at it here, if you see, what I've done is sort of pulled the relevant names and stats from 2019 and compared that to the management information circular from 2020. You can see Tobias Abel, former senior management at HIVE, no longer senior management at HIVE, but on the board, as you'll see in a second. Harry Pokrant, Jessica Van Den Acker, CEO and CFO originally, again, no longer there. In 2020 now, if we move over to the right side of the slide, you can see Tobias Abel again. He's on the board. He's earning $608,000. I think he's earning more on the board than he was when he was part of the management team. Again, there's Olivier Roussy Newton, I believe related to Genesis. He owns 3 million shares. He's on the board. And then, sorry, I didn't mean to go forward. And then up here, you've got Frank Holmes, who's the interim CEO and interim executive chairman. Full credit, he owns 10 million shares, so he's got skin in the game. But I just think it's strange. He's got another full-time job, and he's the CIO of an investment firm, it sounds like. And so, significant changes since inception, and they lack a full-time CEO. So curious to see if that changes over time, but that's definitely something to pull up a red flag on and just make sure if you're looking at investing in the company that you're comfortable with that. Okay. The HODL strategy, you can't make this up. This is too fun. So beginning in 2021, HIVE management has begun implementing the HODL strategy, which essentially means that they're basically holding all the coins that they mine. So historically, they used to sell them, and that's how they would fund their operations. And can you blame them with how these digital coins have appreciated in value? So they've adopted the HODL strategy. There's a press release where they talk about this. This is the term that they use. It's amazing. But credit to them, like all jokes aside, as at March 31st, 2021, they currently hold 320 Bitcoin and 20,000 plus Ethereum coins, and based at the market values back at, I believe, April 7th when they issued this press release, those coins were valued at $60 million. Sorry, I just go back here for a second. So credit to management there. That clearly has been a winning strategy, at least in the market today, and a shrewd move on their part. Okay, so key considerations before we wrap it up with some concluding comments. So strengths here, credit where credit's due. This year was phenomenal for the crypto space in general and for the miners. So this is a profitable year. It's their first profitable year. And in the current digital currency pricing and mining environment, this is profitable for them. And I say and mining because you've got to keep up with the Joneses in mining. You've got to have the fastest equipment. You've got to continue to be investing, and the problems get harder to solve, and the rewards, ostensibly can get, smaller and smaller over time. But based on the current pricing and mining environment, it's profitable for HIVE. Second thing, from a strength, they've got the strongest balance sheet they've had since inception. So based on that same press release where it talked about 60 million in value of coin, they've also got 36 million in cash. They raised that 50 million private placement convert. So their balance sheet's actually in really good shape here. And they've got a strong share price, and I know it's been volatile recently, jumped around a little bit, but they've used that as acquisition currency. So again, another bit of credit to management here. That acquisition they made in New Brunswick, they didn't pay cash, they used shares, and those shares were valued at $5, so a premium to where the stock is trading today. And then lastly, they're one of the larger miners. So if you are interested in the space, you've got a few options: Riot, Marathon, and HIVE. Those are probably, I think, sort of the three of the choices that you'd look at. Okay. Risks. Crypto mining economics are volatile. And we sort of saw that when we saw the gross margins jump around just over the last 3-4 years. And they're unproven over longer time periods. So this is a new business model. Doesn't have a long track record. Number 2, history of losses and significant impairment. So, other than 2021, this hasn't been a great story. Lost lots of money, $90 million impairment, including, almost half of that related to equipment. So that's a risk. Number 3, management musical chairs. Again, on the one hand, there's some shrewd decisions that management's made over the last year, and the space has obviously been a nice tailwind. But to me, it's just a real red flag that there's the lack of a full-time CEO. Frank, as I said, he's the CEO and CIO of US Global Investors, so he's got another full-time job, and it just seems strange to me. And lastly, their operations are not in-house. I'm not actually even sure how many employees they have. I couldn't find that anywhere. I searched around a few documents. Granted, I didn't look too hard. But they've really outsourced their operations of the data centers to a third party. So, really what it seems to me like their business is acquiring data centers, letting someone else operate them for them, paying them a fee, and then they obviously benefit from the coins that they're able to mine. But you don't have it doesn't look like you've got deep operational expertise in-house with employees that are running these day to day. Key drivers, very simple. Ethereum and Bitcoin pricing. I mean, you saw it in terms of the correlation of the share price, particularly with Ethereum. I think about 2/3 of their mining is Ethereum, just based on some anecdotal things that I saw. And then the second one is mining economics. Mining difficulty versus rewards, and how competitive that is, and how much data processing and compute you need to do to get one coin, and whether those economics work. So those are the two things that are going to drive the stock going forward. Conclusion, just like traditional mining, base and precious metals, gold, copper, crypto mining, it's a tough business. Access to low-cost power, efficient computing, which requires CapEx spend, that's required to be competitive. And even then, you need minimum coin pricing levels required to break even. Management, no full-time CEO, red flag for me. I would hope to see change. They're $1 billion+ market cap. Although, again, here to be fair to management, they've only been $1 billion+ market cap for less than 6 months. So I do imagine that should their market cap hold, this will change in the near future. But again, something you really want to think about. And then, HIVE does provide a correlated return to coin price levels, particularly Ethereum. But I just think there are better ways to play if you're bullish on the space. You now have ETFs exist, and so HIVE really doesn't have the same unique value prop that it once had. And it looks like it's a tough business. So again, if you look at HIVE since inception, it's up about 120%, whereas Ethereum over the same time period was up 750%. So just holding the coin itself, you'd have done substantially better. So that's my quick take. This was actually a lot of fun. It's the first time I've sort of taken a dive into the space and tried to learn about it. But want to hear your thoughts. Have you dabbled in crypto investments? If so, do you own a miner like Hive? Do you own the ETF or the coin itself, or maybe another related investment? I would love to hear your comments and thoughts down below. Thanks for watching. We'll be back soon with more content. But until then, don't bury your head in the sand.